Hello and welcome to today's video. So in today's video, I'm going to talk to you about how to invest your first $10,000. And this is occasioned by an interesting statistic I came across on a website called Zipper. And I think you should absolutely check out Zipper. It's spelled this way, ZIPPA.com. And if you are interested in things about finances and how financial information is captured in the US, you should absolutely check out Zipper. It's going to make a world of difference to you and give you a lot of insight. So the data was saying that less than 20% of Americans have $10,000 saved in their investment accounts, which means that 80% of Americans do not have $10,000 saved in their investment account. And it doesn't even go on to say that less than 45% of Americans can meet a $400 emergency if the need arises. I mean, think about it. This is the richest land to have ever existed in human history. No country has ever done or gotten the world that America has, and yet less than 20% of them, if you call 10 people in the US, 8 out of the 10 do not have $10,000 saved, which means that it's not about where you find yourself, it's about the decisions you put in place to make sure that you are able to save and invest and optimize your savings to put you in a position to become wealthy or to be able to save enough money. Which is why some people say what happens in your house is more important than what happens in the White House. But that's just by the way. Okay, so if you have $10,000 in your savings account, the first thing you need to do is to go to one of these investment companies like Vanguard is one of the very popular ones. It's even in the UK as well. Fidelity is one of the popular ones here in the US. It's one of the ones that I've ever used. There's Empower as well, which is the one I started investing in when I came early on into the US. And there's also Charles Schwab, which is one of the credible investment companies that you can use. But what is important to know is that these companies give you rates that are better than your traditional savings account. If you have $10,000 in your traditional savings account, you're going to be getting 0.45% on average per year. Meanwhile, inflation in the US is about 3 to 4%, depending on who you are reading from. And so it means your money is going to be depreciating by about 3 to 4% if you keep it in a savings account. Meanwhile, if you put it in an average investment account, you could be getting between 5 to 10%. And so why would you keep your money in a savings account when you can keep it in an investment account, which will become the bedrock or the basis for you to save your first $100,000 or even your first $1 million over time? And so one of the first things that you need to do is to find a way to apportion your $10,000. And the first one, I've created this table here for you to see all the investment instruments and the amount of money you need to invest in. Now, the first thing to invest in is to open a high yield savings account. And some of these traditional banks even have a high yield savings account. They'll give you like 4%, 4.5, even up to 5% to put your money there. Now, the good thing about a high yield savings account is that it operates in the fashion of a traditional savings account. The only difference is that it has the flexibility to take your money out anytime you want and also gives you a rate of 4 to 5%. And so if you have $10,000, I would encourage or suggest that you put your first $2,000 in a high yield savings account. Now, I forgot to issue the disclaimer that I'm not giving financial advice. I'm just telling you what I would do if I was in this situation and I didn't have any investments based on what I have studied from the financial markets and read about. This is what I would do. So feel free to consult a financial consultant if you want like specific financial advice, but this is what I'm going to talk to you about that I would do in my situation. I'll put $2,000 in a high yield savings account. Now, the next thing I'll do is to invest in index funds, and I'll put $4,000 in an index fund. Now, that makes it about $6,000. But why would I put this amount of money in an index fund? Now, this is important because I mean, this is a long-term investment, okay? And I do not have ready access to it. In the case of the high yield savings account, if let's say your car has a problem, the transmission is down and you need to cough up, let's say $1,500 or $2,000, you can go into a high yield savings account, take out the money without any penalties for you. But in an index fund, you don't have the freedom to take out the money at will. Now, the good thing about an index fund, though, is that the index fund is like a composite, or let me say, is a group of companies that have come together. The best 500 performing companies in the US have come together to form an index fund called the S&P 500. And so it allows you to invest in all of those companies at once. So if I buy the S&P 500, say I buy $2,000 worth of S&P 500 shares, it means that I have invested in over 10 or 20 companies, or even 500 companies at a go. And some of these companies are very renowned companies that have a long trajectory of growth over a long period of time. This involves stocks like VOO. It's one of the common ones, index funds that you can invest in. Exchange traded funds as well is one of the things that you can invest in. And Warren Buffett is quoted to have said that invest in the S&P 500 in good times and bad times, and invest and hold. Because let's say you want to invest for the next 20 years or 30 years, if you are 35 like me, and you start investing $4,000 every year, or let's say you invest $4,000 and leave it in 30 years, you are going to have so much money. And this is going to be just the initial investment, because you can always add up to it. And all of this is helping you develop the culture of investment, because you know you have some money saved somewhere, and so you are going to automate savings, and then it's going to be adding up on a monthly basis. Now, the next thing I would also like to invest in, if I had $10,000, is to invest in US government bonds. And for that, I'm going to put $2,000 as well in there. Now, US government bonds is one of the safest bonds you can ever come across. I think there are some countries that they have bonds that are not very reliable. I think in some sub-Saharan African countries, in recent times, people have lost their investments even though they invested in government bonds. But I think that one of the credible or one of the reliable countries you can invest in is some of the countries in Europe or even in the US, which is regarded as the most financially stable country that has ever existed, and is going to be so for a long time. That's what people hope. And so if you invest in the US government bond, it gives you stability. You know you're never going to lose this money. It has a slower rate of growth, but it's going to give you that stability that your money is going to be there forever. Now, let me just go back a quick recap and say that when you invest in index funds, the average rate of return is about 8 to 10%. I have had to look at some investment accounts with index funds, and you've even had in excess of 15% growth in some years. Some years it goes up, some years it goes down. It's a peak and trough. But when you look at the average, it's actually going up. And so it's one of the things you want to really consider investing in. Now, the other one, like I've said, I've spoken about US government bonds. You can invest in them. The next thing to invest in is cryptocurrency. And cryptocurrency is a very dangerous, or let me say it's a risky investment, but it has a potential for high yield. Okay, so the people who bought Bitcoin when it started about, let's say, $3 or $5, now Bitcoin is selling at such an expensive rate. I don't know, but people say it's well over $10,000 or so. But you can actually think of how much you're going to earn. And particularly now that President-elect Donald Trump, during his campaigning period, says that he was going to focus on cryptocurrency as well.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
If we even go to the chart currently as we speak, Bitcoin and some of the other cryptocurrencies like Ethereum and the rest have absolutely skyrocketed and have gone up in value. And so if you have some money, I'll just talk about putting, let's say, $500 or let's say $1,000 in crypto. It's very risky, but it's one of the things that hold potential or holds promise for a lot of people to make millions from. And so don't be left out. You could actually lose your money, but there are other things that you could also absolutely balloon the value of this money in a very short period of time. And having government backing or signs of a political leader's backing, and with this instrument having been there for some time now, it's something that people have to start looking at and paying attention to. And then the next one is REITs, or real estate investment trust. You know, so there are some companies that have formed a group of real estate companies. Let's say where you live, it's a community, it's a real estate company. There are about 20 of those companies, and they just create real estate apartments and rent them out. And they have an investment fund called a REIT, or whatever you want to call it. But when you buy any of these REITs, you invest in the real estate company. And like you know, real estate is like one of the most reliable forms of investments. And so for a real estate investment trust, I would also put $1,000 there. And so having done that, I have exhausted my $10,000. Now, the other thing I want to say is that investing in things like index funds and stocks, it's advisable to automate the investment you are making, because you can't get stuck at this level and just allow it to be there for a long period of time. It's better if you invest in minimal increments over a long period of time. $4,000 might be good, but investing $400 every month over 10 years or 15 years will do you more good than investing just $4,000 at a point in time. I mean, imagine stocks of Tesla would absolutely balloon now, because robo-taxis or taxis that are without drivers is going to be a thing in the future, and people are going to buy the stocks even before the company realizes it, or before it goes like public. So you have to focus on those ones. Another stock that you can consider is the Nvidia stock. Now, the Nvidia company is valued at $3.4 trillion, which makes it the most valuable company on earth. The other thing about the Nvidia company is that if you compare it to like the top 7 countries in the world, it is just at about the same size as the economy of the UK, which is like about the 5th or the 6th largest economy in the world. And so stocks of these companies will continue to rise, and people are still buying Nvidia stocks. If you don't want to buy an individual stock, you can always buy an index fund like the S&P 500 or the VOO. This is how it's spelled, VOO. Okay, and it's going to help you invest in some of these companies. So absolutely consider that. Now, the last one, which is not part of the $10,000 but is an absolutely essential investment that everybody has to have, is the 401k or 403b. And the 401k or 403b, I mean, the 401k is just the Americans' way of calling their investment account. So if you work in a company that doesn't give you a pension by themselves, what you get is like you have the chance to invest some of your money before government takes out the taxes into an investment account that becomes your retirement account. And if you are working for a company that makes profits, a profit-making company, it's called a 401k. If you are working for a non-for-profit, it's called a 403b. And you need to invest these monies because if you're going to buy your first home, you can take out the investment from your 401k or 403b and use it as a down payment for your first home without paying taxes. So if, let's say, the down payment for your first home is $35,000 and you have been saving $500 per paycheck, which means that you are saving $1,000 in a month, in 2 years you would have had about $25,000 to $30,000, and you can use that money absolutely as a down payment for your home without paying any taxes. Now, it's an essential point. It's a no-brainer. And if you are thinking of getting your own home and stuff like that, a 401k or 403b is absolutely essential. Try as much as you can to invest in that, and even go on to invest in things like a Roth IRA, but that is absolutely beyond the scope of this video, and I'll talk about it in other times. The next thing to invest in is land. In countries like Ghana, Nigeria, Kenya, Philippines, land is not as expensive as the US, and $5,000 or $2,000 or even $1,000 can be a down payment for a good portion of land, a good parcel of land. What I've always learned from my dad, he says that God is not creating any more land. It's the land that is existing that is going to be shared among whichever number of people come up. And so those who start to invest in land are definitely making a good decision, and it's going to yield off big time in the long run. At this point, I think I'll bring this video to an end. If you have any questions, reach out to me at YouTube at manassetete.com. You can always send me a message on Twitter or X at Adam Manasseh, and I'll try to answer them as quickly as possible. Or reach out to me on Instagram as well. I want to thank you for watching this video, and I hope it has been a blessing to you. Thanks for watching, and I'll catch you in the next one.